welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360-degree trades. I am Sagar Nandi, active trader in multiple markets using Q systems that I developed myself. It runs on Metastock and TradeStation platforms. It has multiple components. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. We begin with instruments that often move the market. Dollar Index ETF UUP. In the last market recap, I expressed my view that UUP was likely going to hold the trend line support and go up. Exactly that happened. It went up and even Friday closed with a very bullish shape candle. If we look at the weekly, is also very bullish both in color and shape. It seems that UUP will continue to go up, that is of higher likelihood. It will remain in an uptrend, and if that happens, it may put pressure on the market, though that inverse correlation does not always work. What always works is the direct correlation between the other instrument that moves the market, which is the mega cap custom index. Interestingly, this custom index is actually underperforming the market. The weekly backdrop color has been bearish for quite a long time, 1, 2, 3, 4, 5, 6 weeks, and the bearish headwind reversal signal caught the very high. Though the backdrop color had been bearish, we also have a trend line support in weekly. We have to wait for that trend line support to be broken, which will mean the daily trend line support will also be broken that time. We'll have to wait for that if we look to short. Right now it is inside a triangle pattern, and surprisingly to some maybe it is actually underperforming the market. But it is moving sideways inside a triangle pattern. It doesn't give us any preferred direction for swing trading in the market. Market breadth, internal health check. Usually the market follows the internal health, not the other way around. I already tweeted some of the market breadth charts. Let's look at that. Total view, the broadest view of the market. Interestingly, we have 3 confirmed Hindenburg in a row in last 3 days, which happened earlier here also, but here it was somewhat different from this recent occurrence, and that is because of how they appeared in both Nasdaq and NYSE. Before looking at that, notice that right at the very top, the growth stocks seem to start to underperform, and small cap is starting to outperform. So for last 2-3 days we see small cap value is doing better. Small cap value is doing better for last couple of days. how did the Hindenburgs appear in Nasdaq and NYSE? In Nasdaq, we had Hindenburgs on Wednesday and Thursday, not on Friday. In NYSE, we had Hindenburg for all 3 days in a row. And that is what I mentioned by saying that it is different from the last time we had 3 Hindenburgs in a row. In the total view, that occurrence was here. It was different from the current occurrence. In any case, we'll see if the Hindenburg signal leads to a market pullback. Does not always do that, and sometimes the pullback is not significant. It is a warning signal at the very top, and that is a reason for caution for stocks that is at the very high. Not many stocks or not all stocks were at the very high. There may be buying opportunities in those stocks that were underperforming earlier. I will come back to that idea more later in today's session. From the internal health check, let's continue with the external view of the market. This is how most people around the globe see the market. In the tweet announcing this market recap, I mentioned that I would show that the market was not really bullish for the whole week. And this is where that analysis starts, that explanation starts. Let's start by looking at the market ETFs in the performance radar. Notice that IWM and MDY, small cap, mid cap ETFs, are both down for the week. So small cap is down, mid cap is down. 2 out of 3 pockets in the market are down. Are large caps up? Not really, because RSP, which is the large cap S&P 500 equal weighted, is not only down, it is down the most by a massive 1.74 percentage, which was down more than small cap and mid cap. So it is not right that large caps did better, the in cap did worse. However, SPY and QQQ are up. Why? Because they are market cap weighted and only a handful of mega caps lead to the SPY and QQQ going up. We can see the MAGS and MGC, the two mega cap ETFs, were up. MAGS was up by a massive 3.19%, and that led to SPY QQQ going up, and that was not that was not because the large caps were up. It seems only the mega caps were up, and that too not all mega caps, some mega caps which are of very high market cap. For the week again, large cap, equal weighted, mid cap, small cap, everything was down. That is not a bullish market. But of course, if we look at the market ETFs, it will tell a different story. Starting with IWM. IWM came down for the week. We saw that already, but almost miraculously it stopped right at the weekly and daily trend line support. These memory trend lines work very well. That's why I am reluctant to short when a trend line support is nearby and reluctant to buy when trend line resistance is nearby. And looking at the so many trend line supports in daily and the trend line support in weekly, I am not willing to short out WM. I may instead look to buy some of the small caps that are also bouncing up or going up now because the trendline resistance is far enough away. Dia made new all-time high for the week but closed with a bearish indecision at the top. In daily, we have bearish indecision cluster at the top. These are signals at the top. That of course doesn't mean that Dia is in a downtrend. It isn't, but it is also overbought far from the trend line support. If Dia starts to come down from here, it will be possible to look for shorting ideas in industrial stocks because the support is far away. But there is no short signal yet. It is overbought. Even jump is nearing most overbought condition. In an uptrend, overbought in an uptrend. QQQ, most influenced by mega caps, made new all-time high for the week. The candle is mixed in shape. Daily is showing overbought condition in jump thrust both. Of course, it is in an uptrend again. Again, the support is far away. So if QQQ starts to come down, it will be all right to look for shorting ideas in constituent stocks. Support is far away. Will those be trend following ideas? It can be that QQQ is at or near all-time high does not mean all QQQ constituent stocks are in an uptrend. Some stocks may already be starting to come in a downtrend. And that is exactly what my last week's trade idea pick showed. Though the market was at or near all-time high, I picked a shorting idea in a stock that was already starting to come down. QQQ constituents may have those, or QQQ constituents may have reversal trade ideas as well if QQQ starts to come down. Hasn't started yet. And lastly, SPY again made a new all-time high for the week, however closed with a bearish indecision at the top. Here the trend line support is nearby, so I am less willing to short SPY. Therefore, I may be willing to short QQQ constituents or Dia constituents if they start to come down, while I will be willing to buy small caps if they are going up now, because IWM is right at trendline support. That is how I use support and resistances. Overall, the market ETFs, which are mostly market cap weighted, only Dia is not. SPY, QQQ, IWM, all are market cap weighted. Overall, they are showing it is a bullish market, but the market was not really bullish this week, as I showed from the non-market cap weighted SPY, QQQ, and also MDY and IWM. Next, Edge bucket analysis pinpoints reversals with remarkable accuracy. Thanks to Dr. Jeffrey Scott, after watching whose videos I incorporated it in Q systems. It also has sector industry stock breadth. It shows where the market came from, where it is now, where it may go next. Bucket analysis also shows the market is not bullish. It is actually bearish because 62% of S&P 1500 stocks, nice mix of small, mid and large cap stocks, are below mid Bollinger Band. Is it oversold? No. For this to be oversold, percentage of stocks in the lowest bucket, less than 1, that is stocks below lower Bollinger Band, has to hit 30 to 40%. It is not there yet. So it is bearish but not oversold. Friday's sector industry stock breadth was bullish, not a lot. especially when we go to granular levels of industry and stocks, it was bullish, but somewhat bullish, not a lot of bullishness was there. If we look at longer periods, 1 month period is actually bearish, more red than green. 10-day also long term for swing trading, bearish, and 5-day this week. Again, this shows that this week was anything but bullish. It was bearish, anything but bullish, anything but neutral. It was clearly bearish. Almost 80% of sector industry stocks were red, and it improved a little bit over 2-day period and 1-day period, and that is why it may be possible to look for buying candidate stocks that were underperforming earlier may be starting to go up. We may look to buy those stocks. We'll see if we can find some. I'm sure we can find some. Before that, continuing with technical breadth from Q Finder, we only profit by buying stocks going up or shorting stocks coming down in directional trades. Most of Q trades, most of my trades, if not all, almost all, maybe all, are directional trades. The 360 degrees analysis gives powerful, useful, effective, profitable directional trades. That's why I stick with them. I don't try to take neutral trades like iron condor, not usually. Technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. And the technical breadth is an interesting piece of insight. It will show two diverging stories in the market. The weekly technical breadth is bearish across the board in all categories: strength, trend continuation, trend reversal. On top of that, the headwind alert, the unique reversal signal aggregate alert, is showing that stocks that were at a higher price level that are in a risk of coming down more. Not only that this week was bearish, they may come down more. That will probably be the stocks that were rallying a lot. That is what I am reading from the weekly technical breadth. On the other hand, if we look at the daily technical breadth, we have a reverse picture. Across the board, we have bullishness in all strength, continuation and reversal categories, and on top of that now we have a bullish headwind possible reversal signal that comes at the bottom. So it is possible to look for bullish trades at the very bottom and be cautious about buying stocks that are at the very high price level. That is what these two technical breadth graphs are showing. I also noticed that price levels of bullish trades are mostly coming from mid-level price. And of course, we have much more bullish trades on Friday than bearish trades. So at the end of Friday, if I am looking for trade ideas, I will probably look for bullish trade ideas. Q market level summary: the most important trading decision is whether and where to buy or short, or whether to stand aside. My conclusion is avoid buying stocks at a very high price level, and it is possible to buy stocks at support like IWM starting to go up from support, which are Q360 degrees trade ideas. Looking at the overall market's weakness, seen where? Seen in RSP, QQQ, IWM, MDY. Seen where? Seen also in sector industry stock breadth, bucket analysis and weekly technical breadth. I will be cautious and I may look to buy defensive stocks. Review of last week's trade ideas. I shared only one, that was FLUT, and this again shows how I am usually a bit ahead of other people. Not many people were willing to share shorting ideas. But remember what I mentioned just a while ago. The SPY QQQ dia making new all-time highs this week did not mean all stocks were going up. This is a perfect example of that. It was coming down in weekly and daily both in a downtrend, and it was my bearish peak based on this candle, last Friday's candle. It was a trend following short setup. That worked beautifully for a flow trend following short setup. We tend to book profit once the risk distance is covered, or we book profit at the lower boundary level, both of which were true, and this shorting idea closed with a profit. Beautiful, isn't it? This week's trade ideas, I will do a top-down analysis starting with defensive sector, trying to find some trades, and yes, we will find some trades because I have already done that analysis. But let me show what I did. Starting with the sector scorecard, look for the defensive sector, that is real estate and utilities. I could include healthcare, but I did not, because sometimes healthcare has speculative stocks or biotech stocks that can go suddenly either way. Now, if I look at the sectors, real estate and utilities, they are not one of the strongest sectors on Friday, which should be colored in cyan. They are not also one of the most accelerating on Friday, but that is okay. I'm not buying stocks based on sector scorecard. I'm just looking for defensive sectors, and I am going to buy into industries in those defensive sectors that are either strongest or most accelerating, which I can find using the green button. So now I have real estate, 3 industries, utilities, 2 industries that are either strongest or most accelerating of all industries. I'm happy with these 5 industries. Let's find liquid stocks in these industries. Out of all liquid stocks, we have only 27 belonging to these industries, and I am going to look for, being more conservative now, I'm going to look for not 1 green star but 3 green star, which gives me only 8 stocks. They are 3 star, therefore they are both undervalued with high earnings growth. I like that. All of them have some dividend, some have quite nice dividend also. I'm going to look for stocks that were up on Friday. So let me click the plus button. Left with only 6. Am I going to look at these 6 charts? No. I'm going to see if any of them have possible Q buy setup. One more click. Left with only 3. So with thousands of liquid stocks, I'm left with 3. One has a possible breakout trade setup, one has a possible box, one has a bounce. I like the bounce setup because I saw IWM was going up, but let's look at all of them one by one. Let's see if we can find any 360 degrees trade ideas from these 3, starting with OHI. Nice breakout, but it has breakout here, but it has a long upper tail. I don't want to buy this immediately. Next one, GLPI, has a possible flow setup, the special case of flow setup, where it tries to anticipate that price will move to an uptrend. It is not in an uptrend yet, but of course the weekly is not meeting the checklist conditions, and on top of that, I mentioned earlier, I respect the trend lines always. It is just below trend line resistance. I am not going to buy that. Left with only one, WTRG. This one I like. It stopped right at the weekly trend line support as well as daily trend line support and went up with very high volume. It is giving a bounce long buy setup. Let's look at its single page scorecard, WTRG fundamental scorecard. That is looking nice. We know it would be a 3-star buy candidate, so undervalued as well as with high earnings growth, with increasing earnings growth as well. Funds are accumulating, has a dividend yield of 3.5%, earnings rate is enough distance away, probably not, so that is a cause for caution. 4th November is the earnings date. Today already it is 1st November. So if one is buying, one may buy using stock and try to exit before earnings, or one could trade using short put vertical, which would be my preferred instrument and strategy in this case, provided options are liquid enough. 75% peer stocks are up, that is bullish. Water utilities, and if I go back now to the specific industry scorecard, it is one of the most accelerating, which is a turnaround candidate. So let me list this as my this week's trade setup, a defensive pick from utility sector. I don't have any long position in this trade. If the stock goes up next week, I may try to buy it using real-time fine-tune charts. Another way, which I would probably prefer, if the stock comes down, even goes below the trend line support and reverses, creating a false downside breakout, right at the point of that false downside breakout, I may try to buy it. Both of those buys are possible, and I will try to do that using real-time charts. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today, just as you would almost every other day. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend, and as I always say, there is no reason not to do that. Trade profitably. Thank you.